Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar ETF Conference. And I'm here with Robbie Cannon, CEO and President of Horizons, and also Greg Valliere, who's Chief Investment Strategist of Horizons. Gentlemen, thank you for being with us.
Thank you.
Great to be with you.
Greg, we've seen you in many capacities over the years, and as being an expert on macro strategies, and especially in the political side.
Yep.
What's going on in the markets today, and what are some things that we should be talking about?
Once again, Washington is a really big factor for the markets. We may have a government shutdown in December, just 1 week before the last FOMC meeting at the Fed for the year. Could this influence Janet Yellen's decision to raise rates? So that's a big story. There's a little presidential campaign going on that stirred things up. I think that is going to continue to be a very hot story. Does Joe Biden get in? Does Donald Trump start to fade? We've got a lot of big stuff going on, and then there's the congressional legislative agenda where they're going to be looking at tax reform. So a lot on my plate.
Absolutely, and from an economic standpoint, with the Chinese president just being here, are we going to see any improvement in global economic markets, or are we going to continue to be challenged?
You've hit on the big wild card, Tom. That's the big one. Is China going to reduce its growth moderately or more sharply? If Chinese economic growth really starts to falter, that affects the markets, and in my city, it affects Janet Yellen.
Absolutely. Well, Robbie, Horizons is one of those ETF strategist firms,
Absolutely.
and you folks work a lot with financial advisors, especially those that have embraced ETFs over the years. And from a long-only standpoint, it's worked pretty well up until this point, but I think you folks see that there might be some headwinds coming.
We've had a nice run. Since 2008, the market's up substantially. And so advisors, not only advisors, but clients have won accessing the markets. ETFs have made it super simple to not only access the US market, but also international markets. But as Greg talked about, there's some headwinds. And so from a landscape view, we also think that risk management is very important for those clients.
Tell us how you work with advisors, and how do you help them with portfolio construction?
Absolutely, and we run the gambit. From an outsource standpoint, advisors can outsource solutions to us, or we work actually from a consulting standpoint with advisors, looking at their process, looking at how they choose, and trying to make it better.
Yeah. And today, as you look at potential rising rates or challenges in the equity markets, what are some things that advisors, especially those that have embraced ETFs and been happy about it, moved from active management, what do they need to be concerned about now?
Well, and a lot of advisors right now are moving to passive indexing strategies, which we think it's exactly the wrong time. There's so many pitfalls, as Greg alluded to, not the least of which is we're facing rising rates. And so when you move to a passive indexing strategy, especially around rates, you subject yourself to some pretty severe risks. And so you need to partner with an expert that actually can navigate that for you.
Yeah. Greg, indexing has been very popular, and really it's buying everything and holding for the last 6 years has worked. Now, as you look at markets and kind of the ebbs and flows that are going on, is it going to have to be more of a stock picker's market?
I think so. That's why what Robbie said makes a lot of sense. I would also say things change. They don't stay exactly the same for year after year, and I think we are getting into an environment now where around the world there's still anxiety, rates are low. In the US, there's a clear trend towards stronger growth. You only have to look at the labor market to see that something's really happening finally in the American economy.
Right. Greg, Robbie, thanks so much for your time, and really appreciate it.
Thank you.
Yeah.